Hey everyone, Alan Brochstein from 420 Investor and New Cannabis Ventures bringing you your weekly update where I preview the New Cannabis Ventures weekly newsletter, which we've been publishing, I can't believe this, but since 2015. So each week we share some of the top headlines from either the curated press releases or our own proprietary content, which I'll get to in just a moment. First, I want to discuss the market. Thank God we finally bounced. And what's really nice about this is we continue to get some negative news out of the MSOs, right? So maybe this has all been absorbed, hard to tell. Of course, the real driver this week was the bounce in the broader market. So perhaps that's what really drove the prices higher this week. We rallied, as I said, for the first time after 4 straight weeks of down. We were up 6.6% on the global cannabis stock index. But that leaves the index still down 17.4% year to date. So the performance this year has been marred by, I think, by 2 things. One, the broader market, which is still down, but also we've had our own sector problems, as I've been discussing on these interviews, on these videos the last few weeks. Certainly slower cannabis demand, a more aggressive pricing environment here in the United States, and in Canada as well. So with that, let's talk about some of the news this week. In terms of the curated press releases, these tend to be around capital raises, M&A, and earnings reports. So I'm just going to hit these all in alphabetical order. The first one, Agrify, borrowed $65 million, kind of crazy. If you ask me, this is a company that did an IPO, and then it stepped on its IPO investors by doing a secondary offering last year right after that. And so it raised a lot of capital. It spent some on M&A. It's also helping to fund some of its customers, but it borrowed $65 million. The way they went about this was also issuing a lot of warrants. And so those warrants, I believe, were at $6.50, way below the IPO price. And this pushed the stock to an all-time low. I think it was a very negative signal from management. After the close on Friday, it was disclosed who the lender is. It's High Trail. If you've never heard of High Trail before, look into this company called Hexo. So the next one was a earnings release from Air. And Air Wellness had a little bit stronger than expected Q4 in terms of its revenue, but the outlook was certainly different, right? They had provided guidance for 2022, and now all they're saying is very similar to what others have said, that the first half is going to be kind of similar, and then it'll lift off late in the year as New Jersey kicks in and a few other things. So they did kind of preserve certain aspects of their guidance, saying they expected to end the year kind of in line with that guidance. So certainly a negative there. And as I shared with my subscribers at 420 Investor, I think the good news there is the stock didn't go down. It was quote unquote bad news. Stock didn't go down. The next one, another one with bad news and the stock didn't really go down, was Hexo. And we usually in our headlines report the revenue. The revenue was $50 million, I believe. It was a little bit less than expected. And what a disaster. Considering all the M&A that the company has done, and they grew a little bit sequentially, but this was a full quarter of inclusion of both 48 North and especially Redecan. So it was a very disappointing quarter. If I could quote management, it's like, hey, it's not our fault. We're the new guys. Don't blame us. So, okay. In any event, the company remains over a barrel right now trying to solve its balance sheet issues. And they did a lot of write-downs in Canada. Those write-downs get reported as part of operating income. And so they had an operating loss of one of the largest ones we've seen yet in Canada for a single quarter, $670 million. Most of that was the write-downs. Now, the next one was a positive report. The stock didn't rally, but High Tide. And High Tide's become a very diversified company. I used to call them a Canadian retailer. They are that, but there's so much more. They're a CBD company. They've gone international. And, of course, they have their ancillary business in the U.S. So the revenue was up a lot sequentially, 34%. They've done some M&A. That wasn't all organic. 72 million Canadian, as they pointed out. It's one of the highest single prints for a Canadian company in the cannabis industry to date. Like I said, I think it was a little bit ahead of expectations, if I'm not mistaken. But it's been really interesting. I have to hats off to these guys for the effort that they've been making and the progress that they've been making. It's been a tough market, and I listened to that call. It's actually, I think I might have talked about this on this video 8 weeks ago or so when they reported their year end. It's been very interesting to see what they're doing in Canada. They're using their ancillary products, which they used to sell wholesale to others. Now they're internalizing that, and they're selling it at deep discount to their club members. So they've built a huge club base. So anyway, that's High Tide. Interesting quarter there. Ianthus, the company that nobody likes to talk about, but they continue to post some pretty big numbers. But like a lot of the companies, they did see some softness in Q4. There was no M&A there, of course. So purely organic, and their revenue declined 3% sequentially to $47 million. Maramed, and I'm not sure exactly why their revenue was down as much as it was, but it fell 7% to $31 million. And then the final one was also a financial report, Terracind, and their revenue was flat. They completed to the Q3 and to a year ago, and they completed their conversion to GAAP. So these were their first U.S. GAAP numbers, and I think I listened to that call too, of course. And, the report in and of itself, it wasn't a good report, right? I mean, they missed. But I think anybody that listened to that conference call heard the enthusiasm from the company. Its new president, I believe is his title, spoke, and I think that was also something that investors found to be reassuring to hear his words. So that was the news that we published, or the highlight, the top news that we published last week. That was press releases. And in terms of our own exclusive content, this tends to be around the interviews that Carrie does, as well as market updates, monthly market updates that I do. And then I also do index and revenue tracker updates. And this month, one market, excuse me, that we needed to review again was the Canadian market. The StatsCan came out with data. And to me, the 2% sequential decline wasn't the big story. And I don't know the answer to this, but the big story was what happened in December. They took their numbers way down. So it had been a record month, and not anymore. I mean, way down. So something must have happened. I don't know. They do revise these every now and then. So the story is, the Canadian market is seeing a lot of slowing growth. And the year-over-year gains, as the market matures, in January it was 24%. It rebounded from just 19%, a record low in December. So the Canadian market is decelerating, but still growing. The next one was a review of our revenue tracker, and I do 2 of these for March, and also probably for May, August, and November, because there's so many reports. Well, we'll see. I don't know. Each quarterly report that comes on, my work just goes up and up and up. There's so many companies now that are public and reporting very substantial revenue. It gets very compressed. But in the Q4 filing season, which we're in right now, it's a little bit more spread out. So I got the 2, and this is the first of the 2 updates. And in general, there's a theme emerging. If you've been listening to me on these videos, it's not new to you, but the theme that has emerged is pricing pressure. And we certainly saw that in the guidance at Curaleaf, and as well as in GTI's sudden decline in its gross margin last quarter, and also in all the commentary that we've been getting. And so when I wrote this, I had also heard that the Ascend call, and they had echoed that same sentiment that certain markets have gotten more competitive. And by the way, these most competitive markets appear to be Pennsylvania, Massachusetts, and Florida. So that was the piece on the revenue tracker. And then finally, we had one interview this week. It was an interview with Karan from the, oh boy, I'm blanking out. Casa Verde. I was translating it from Casa Verde. So Casa Verde, that's associated with Snoop Dogg, if you're not aware. And Casa Verde was one of the first investors in the ancillary space. That's where they've been focused. And the interview was really helpful for understanding how they go about investing. And they've raised and deployed several $100 million into the space. And beyond ancillary, they've started to get into more international types of investments as well, and in Europe, and they talked about that as well. So that was the newsletter's body for the most part. And of course, each week we also pick a topic and talk about it a little bit. And this week went with something maybe a little bit different. We talked about ETFs, and the ETF space, the cannabis ETF space, was born in April 2017. It seems like a long time ago at this point, but it was just 4 years ago when HMMJ, people don't even talk about that one anymore, launched up in Canada. And that one's now, I believe, by assets under management, I believe it's the fourth largest, maybe the third, I think the fourth. And so earlier this year, I think in early January, I did a review of what I believe are now 11 ETFs in the space. I talked about 7 of them in this piece today. I shared that review at 420 Investor, more extensive than what we put in the newsletter this week. But I shared some observations and a little bit of detail about these top 7 ETFs. 4 of them are above 100 million, and there's another 3 between 50 million and 100 million. And I think ETFs in general, and certainly in the cannabis space, serve a purpose. I would say there's been some huge flaws with some of these ETFs over time, and I would characterize this as an evolutionary process. And the ETFs today are certainly better than they were several years ago, but they continue to have some problems, and I noted those as well. So I think that's pretty much it. So this was a great week for the cannabis market. I can't promise I'll say that next week as well. Again, it's been 12 straight months of decline on a monthly basis. We were only down 2% last month, but it was still down. And we're still down a lot this month, and there's not that many days left, but hopefully the tide has turned. So anyway, I hope everybody has a nice weekend, and I'll be back next week. Take care.